Well, good morning. Welcome to this edition of the Ag Market Network Weekly Market Report. Exports have just come out. We're going to go to those right now and see what we've got. This is the 4th of April, and a good number. Net sales of 322,100 running bales, up 47% from the previous week, quite a bit over the 4-week average. Vietnam took 100,800 running bales. China took 59,000 running bales. Bangladesh took 48,700 running bales. India, this is a surprise, you don't usually see this. India took 43,800 running bales. Turkey took 42,700 running bales. Light cancellations. The new crop sales of 151,100, also excellent, with China taking most of that, 118,000. Shipments of 410,900. Those are very big numbers, maybe the high of the year. And so what have we got here? Market is up right now 57 at 77. Up 60 at 77.65 with a high of 77.76. These are good numbers, and expect the market to continue to find firmness and probably move up off of this. Looking at soybeans, net sales of 1,971,700 metric tons, also a very good number. China took 1 million. Wow. China took 1,700,100 metric tons, so almost all this number, or most of it, except for 200,000 metric tons, went to China. And we've got Indonesia taking 91,500, unknown destination taking 65,200. Soybeans before the report were up 3 1/4. Soybeans evidently were expecting this because right now we're up 2 1/2, so no reaction. Corn, 537,300 metric tons, down 41% from the previous week and 31% under the 4-week average. Japan took 258,300 metric tons. Mexico took 229,900 metric tons, and Colombia took 114,900 metric tons. That's corn. Corn before the report was up 1 1/2. Right now it's up 1 1/4, so no real reaction yet. Wheat, 704,700 metric tons, up 48% from the previous week and up 70% over the 4-week average. Iraq took 200,000 metric tons. Egypt took 120,500 metric tons. Indonesia took 115,000 metric tons. Wheat was up before the report 3 1/2. Right now it is up 3 1/4. So far, we've only had slightly better reaction in the cotton. These are good numbers in cotton, good numbers in soybeans, very good numbers. And even though the market was expecting it, it doesn't change the fact these are strong. I don't think cotton was expecting quite this. So what are we looking at here over the last week? What's the news been? In cotton, of course, it's been this way since last June. The primary news, the thing most people look at, will be the trade agreement. And this week we have the Vice Premier of China in the U.S., in Washington, meeting today at the White House. The feeling is they're wrapping up the details of this trade agreement, and that can't help but be positive in agricultural markets for those things that we export quite a bit to China, which would be soybeans and cotton. So we should see positive news if we can work out a trade agreement and some announcement is made there. Other than that, we had planting estimates last week. They were a surprise and very strong for cotton. If we look at cotton here over the last month and a half, we have seen a 700-point rally already in cotton. So that has been a combination of things. Some optimism over a trade agreement. Also, we have seen large fund, or the big speculators were heavily short cotton. They've covered that. Now they're starting to actually get long. So that's the reason we've seen quite a bit of this rally. What happens now? What happens if we get a trade agreement? Well, we could see cotton move up into the area of the low 80s to mid 80s, and right now we are at 77.63. So there's still quite a bit more to see to the upside with an announcement of a trade agreement. What to do in the markets? Well, you should certainly consider hedging new crop cotton if we do get that kind of rally. Where will new crop be? Well, right now December cotton is trading At 76.58, it can rally another 200 points, another 300 points is possible. That will be a good opportunity to take advantage of because we think we're going to get more acres planted than this estimate that came out last week showed, because after all, that was a survey that went out to farmers in February. And we think that with higher prices, you're going to see more acres. What about soybeans? What about corn? What about wheat? Same sort of news. We have been reacting to talk about the trade agreement, the estimates last week for quarterly grain stocks, and also for planting progress or planting estimates were that soybeans were friendly, were bullish, corn was bearish, and we saw that reaction, and wheat was slightly negative. But now that that's out of the way, we're looking forward to other things, and primarily that will be a trade agreement and also weather. What to look forward to now? What happens if we get a trade agreement? We've seen a pretty big drop in corn, so now we're looking to get back to where we were, which was possibly seeing new crop corn back at $4. Right now, new crop corn is trading at $3.91. So actually, looking at the screen, we are looking to get back to where we were in December corn. A couple of weeks ago, we were at anywhere from 404 up as high as 410. Still think that's possible in new crop corn. Moving in sympathy with soybeans on a trade agreement. What can we expect from soybeans? November soybeans possibly, and they're trading right now at $9.34. We could see that market pushing back up against $10 off a trade agreement. And the wheat market, September wheat right now is trading at $4.84 and a quarter. We could see that market getting back up to the $5.35 to $5.40 level. So we could see higher prices, which will give us opportunities to price our crops or hedge our crops with that. You need to stay alert to that. These are opportunities that don't always last, and you need to be able to be in a position to do some pricing. So one last look at the market. Cotton's up 50. Soybeans are up 3, corn's up 1.5, and wheat's up 3 1/4. That's it. Thanks for joining us for this edition of our weekly Ag Market Network weekly update, market update, and we'll see you later. Thank you.